Our most pleasant day. Not just for the itinerary, but also for the conversations. I found them fascinating to hear what's on people's minds and how they plan to spin some sort of focus going forward in such uncertainty. Yeah, it's a good little location here. For those not familiar with a really original map of the very independent capital of Switzerland, the 13th century church of God Valley shot, looking down to Italy and over to our east.
All right. Good morning, everybody. So as we usually do, first thing we want to look at what happened in the overnight hours. The European market wrap is a really good summary of what's going on in Europe right now. If I was to scroll back far enough, I would find the Asian wrap, and you can go all the way back to last night and kind of get a look at what moved our market through the day yesterday. I found that useful when I would see moves in the intraday and I couldn't find a reason for why it made moves. I like going back and kind of finding out what it was that caused something like that. This European market wrap will oftentimes tell you what particular sector in Europe is doing good this morning, and we very often see a bleed over. So if this says energy or real estate or whatever, it's very likely we want to focus on that same sector as we come into the open in our markets. Another thing that I like about this that we don't see in a lot of other places is it has a list of who's going to be speaking today. Now, this is no guarantee that it's all of them because they can do surprise visits. They can just show up on a network and start talking. We seen that last Friday. But for the most part, this is a really good heads up. Now, it does show local time. So this is my time zone, not market time. So Brainerd's supposed to be speaking at 12:15, not 11:15. It's really important to understand the tools that you're using and what time frames that it's showing. Another thing that you can use to kind of get a gauge for what's going on around the world is Koifin. Come in, check top news, global markets. I like this. It's short and sweet and to the point. I don't have to spend a lot of time scrolling through and looking at it. It tries to do an aggregate news, but depending on what level you have as a service, you're not going to get very many news sources. And I'm on a free account, so there's not a lot to it, but it's still a quick, fast heads up. If there's something really big going on, you'll see it in the headline. That's the important part. All right, so from there, we bring it over to Thinkorswim, go to the market watch. 8:30, 10, 10:30, 11:30, 1 o'clock, 2 o'clock. It's a full house, guys. We've got everything. Every hour on the hour, we've got something. So keep that in mind all day today. We're going to be revisiting economics. Now, the petroleum status report normally wouldn't be that big of a deal, but we've seen energy more and more lately be part of the catalyst for what's going on in the market. So don't assume that 10:30 is going to roll by with nothing happening. It's a low anticipated economic event. We don't expect anything really out of it. It's there every Wednesday. It's not. Just keep an eye on it, right? You can't complain later. Oh, I didn't know it was going to come out. Right. So we got speakers at 11:15 and 12:15. And then we have the other economics that we just talked about. That gap is still in play. Looking at the ES, the gap is marked there in that red box. It's from where we closed on Monday evening and then opened back up in Globex Monday night. It's still not closed. And we actually fell back out of it without getting it closed, which is a real surprise. We've seen it before, but it normally, if we get that close to the top of another side of the gap, we usually get that gap filled first and then dump. So it's a little bit of a surprise that that's not how it went this morning. It kind of goes back to, when what should happen doesn't happen, right? And then that leaves us with the market we got right now. The ES is only down 0.5%, so it's worthy to consider. We have a 2.89 ADR, plenty of room to run. We do have an untouched point of control from Monday over our head, and the ADR target to the upside is 40.62. So if we were to back up and get rid of all of this stuff on the chart for a moment, consider the range that we've been in and consider where the rejection was at. We don't even want the bottom of that. We just that right there. 30.69 down to 38.50. Plenty of room. Lots of movement, a whole lot of energy being spent, and nothing for all that effort and time. Right? And it's even worth maybe even going in and tightening it up a little bit. But that is the zone and that is the range that we've been maintaining. The longer we stay inside of this range, the more energy we're winding up. Now, energy is a weird word that I never seen anywhere else when relating it to markets until I got into this fractal energy, the RSI Laguerre polynomial blah. It's a heck of an indicator. There's a couple books on it. The math is like trying to figure out rocket science. You don't need to really grasp the math behind it. You can just look at the darn thing. But what we found out using that indicator is when a market is sitting there working sideways, it's collecting and building more energy. We always assumed that, but we'd never really had a way to gauge it or modify it or quantify it. So when you start using that indicator, you can actually physically see how much energy is being wound up. And so it's important to recognize the longer we stay in this range, the more energy we're building up. Now, there's no promise of how that energy is going to be spent. There's no direction implied here on which way we're going to break out. But you have a quant tool here, linear regression line. And if you just snap that thing from the last swing high down, you can see how everything just runs in play. Right? Swing high, swing low, swing high, swing low, swing high, swing low. And the swings are getting more and more violent, right? As volatility picks up. Now, we've talked a few times about setting the low and thinking, yep, that's the low. And then we get a new low, right? Every time we have this discussion, I start talking about exactly the same situation that we're sitting in now and how if we're going to roll over and if we're going to go to the upside, then we need to stop seeing new lows and we need to start seeing higher lows. It's as simple as that, right? Kind of back up and look at how it was here when we were getting higher highs and we had the swing high. And then we stopped getting higher highs. We started getting lower highs and lower lows, and we rolled over across that top. Well, we're looking for the same rollover again off of the bottom. But if we continue to print new lows, then we're going to have to continue to follow the swing, the pattern that we have. Simple, easy, non-complicated, right? So this little bit of range, that gray box that I had marked there, is that same gray box from the last few days that we were just talking about. It has the capacity right now to begin that rollover. In a micro scale, when we zoom in here a little bit more, we do have higher lows beginning. But notice I had to zoom in really far to get to those and that they're not seen on this higher perspective. So they don't stick yet. They're not done. They're not real. They're not valid for swing highs, right? Not yet. But we're starting in the right direction. So as uncomfortable it is to be in this sideways range, it is the start of us beginning to turn around and perhaps work a little bit to the upside. Now, we're not going back to the top anytime soon, but getting into 42, maybe 4,300, yeah, that wouldn't be too bad. Be a nice little bear market rally before we flip back over and dump back off again. So that's what we're looking for, right? Trends are validated on the higher time frame. They are recognized as reversed off of the lower time frames, and it's our job to try to split the difference between those two time frames, having a great enough perspective to see the trend and recognize when that trend is reversing. And of course, if it was easy, everybody would do it. So our expectation for today, we can only do three things. We can only maintain the range, break to the upside, or break to the downside. That's it. If you look at the range would be all of yesterday into Globex last night. I like to break that range down into different quadrants or zones. Take our current Globex low to our current Globex high. That's part of the range. And then from our current Globex low to all of yesterday, to lowest point. This entire area from red line to red line would be our range for today. If we are sitting inside of yesterday's candle, then we're in a range day. Anything that moves like the S&P, and since we're in a high correlation coefficient, 8 out of 10, 9 out of 10 stocks are all moving like the S&P. If the S&P is range bound, so is Amazon, Microsoft, Apple, Google, everything else, right? Sure, they may wick out or hop a little farther than the S&P, but at the end of the day, if we're not traveling in the S&P, we're not traveling anywhere else. It's why on range days, you don't want to try to go long in options just to hit some resistance, or just to have the S&P hit some resistance, and whatever you're trying to trade starts to fade off again. Simple logic, right? So if 8 out of 10 things are all doing what the S&P is doing, focus on things that aren't necessarily stock related. Go for commodities, precious metals, oil. Go for sectors, countries, even, right? You can trade ETFs of countries. Try to trade something other than just the same old general stock market where 8 or 9 out of every 10 companies are all doing what the S&P is doing. Because if you're going to do that, you may as well just trade SPY. At least then you'll get the most liquid options, the best bid ask. So if that's our range for the day, our bullish case would be 40.62. Remember, that's just an average normal move, nothing extreme. We're not talking about, if things get wild today. And a bear market target would be 38.40. To get to 38.40, we would have to break through yesterday's low. That's going to be a pivot point that would be a little difficult to get through. And then we would have to fight with last Thursday's pivot point. I don't believe it would provide too much of an issue, but still something you want to be able to recognize that could provide a little bit of resistance if you're trying to trade it in that direction. If you're looking for some support, well, then it could be used as that word too. It's a pivot that we're likely to have to struggle to get through. There is a virgin point of control down there, 38.31. And if things were to just go completely crazy today, 38.11, the cog line would be my intraday target. So like we usually do, if we draw a line like this, just matching pivot points, we want to try to find some validity behind it. Just connecting wicks together doesn't really give us any assurances or validity. We're looking at a 10-day, 30-minute time frame chart. We've got our 10-day point of control, and we're basically there. I mean, we are right at that point of control. It's always worth noting when you're looking at a volume profile like this, where the box is and the size of that box, right? Sometimes this box is really, really narrow, and then sometimes the box is really big. These lines that are on here are the value area high and low, and then the point of control. In green is volume by time or by price, and in blue is volume by time. So we got TPO and volume profile, and they provide that perspective for us. Now, should we break to the upside, when we get through that resistance of our own Globex high, which is also where there's a lot of volume resistance, we get into a shallow area beyond that. So if we can get through our own Globex high, we've got a pretty open road ahead of us, other than the top of that gap, right? We still have that gap that needs to be closed. And that is going to be a significant level of resistance. Make no mistake about that. Now that we're back down underneath the bottom side of that gap, that is now a resistance again. So we would have to get through that one, then where the gap started, then through the value area high, and then on up from there. And as you can see at the value area high, there is yet again a lot of volume there. To the downside, we do have a little bit of volume support around 39.11, the cog line. There is just this massive swell of volume underneath this, all the way up to the point of control. There's a lot of volume. We would anticipate that that volume is going to act as a support, but so far it's not. And we can't trust it to do that. Right? We can't lean into that concept and think, oh, it's a support level. Nah, no, it's just not helping. Take it into a 5x5, 5-day, 5-minute chart. Call it mapping out the 5x5. If each day has its own volume profile, we can mark those volume profiles and look for untouched points of control, called virgin points of control. The one we have for Friday, for an example, I mentioned already. We carry that forward until price hits it. We have one from Monday. We carry that forward until we hit it. Right? And as you can see, we haven't hit it. It's still an untouched POC. The one from yesterday, we hit it. We just hit it. Now, it's worth noting or learning, if you were to mark this and then go in and see how price reacted to that level, take it into, say, a tick chart, something that you can look at on a micro time frame. Put it on a 10-second chart on your Tradeovate or something like that, and really look at how price responded when it came into contact with yesterday's POC. Use those for earning examples for what to anticipate the next time we have price come down and interfere with a POC. But keep in mind, that was yesterday's POC. Right? We're not talking about one that's been on the chart for days or weeks or even months. It's a completely different discussion. But it's a useful exercise, and you would learn a lot more about what our anticipation is for when price does come down and make contact with these levels. With everything on the docket today, it's hard to try to carry a narrative other than we're bearish right now. We're fading off, right? We're down 0.5%, but it's not aggressively bearish. It's more like a catalyst waiting to happen than any kind of real behavioral attitude in the market this morning. And that's important to recognize because it can turn around in the heartbeat and just continue going in the other direction again. We want to find the drivers of what's moving the market. And this morning, looking at finance juice, other than the ECB over there chipping their teeth, that's about all we got. Now, Mario Draghi is going to be speaking today, and that dude has the capacity to shake our markets. He is a fire thrower, and he can really rock things. So be ready for him today at 11:15. The FOMC minutes come out today. Now, this is one that always bothers me. We had an FOMC meeting. Homeboy came out, chipped his teeth afterwards, rocked the market, told us what they talked about in the meeting. Now, sure, he summarized and he didn't give us, every little word and statement. But they go back and they rehash everything, write it all out, and they publish the minutes. That's what we're getting today. The minutes are going to be fed to an algo. The algo is going to go through that, pick up keywords, and begin trading through a basket of stocks. It's going to drive order flow today at 2 o'clock. And then after the machines, we're all going to slowly parse through the language, see what was written in there, and then we're going to begin trading. We won't know what the institutions are doing using anything like a COT report for a couple of weeks, right? Because Tuesday's when they deliver their report. The government gives it to us on Friday. So next Tuesday, we'll have what they did this week, but we won't see it until next Friday. That's a long ways off. But with those FOMC minutes on the table today, there is an expectation that we won't get a lot of participation. The thing about that participation is it's been really light anyways. If you haven't noticed, things are just a little bit off. Volatility's off, volume's off. These levels are weak. Haven't done it for a while, so we're going to do it again today. Distance from the moving average. This is measuring how far away from the 10-week moving average is price right now. I'm on a 1-year daily chart. In the last year, how far have we gotten from the 10-week before we turned around and came back at it? The worst that we've got is 7%. Right now, we're off of that low, and we're still about 5.25% away from the 10-week moving average. This really says we need to hold this level and let the 10 get caught up with us, or we need to move back towards the 10. That's the 10-week. Think of the 10-week as a 50-day. They're not perfectly synced, but they're close enough. This is the same indicator, but now we're looking at a 10-day instead of a 10-week. Notice that we're really close to the 10-day again. In fact, if you were watching yesterday, the SPX kept tickling that 10-day, and it just couldn't quite get through it. It tried. It worked as an amazing resistance level yesterday. When we're this close to the 10, this is like getting back to the center of the ball court. We have the capacity from this level to move 4% in either direction, right? 4% being about the average for the year to the downside. 3% to the upside is near extreme. I like to think of it as like 2.5 to the downside and 2 to the upside. So we have the capacity to make some serious moves, even to the downside. If you think that we've gone down far enough and that there's no way we can go down farther now because, gosh, we've gone so far, this tells you that is absolutely not true. We have plenty of room to move to the downside. Since we're looking at the daily levels anyways, let's go ahead and walk out to the higher time frame and look at where the expected move is for the week. That green line is the expected move to the top side. The way that I approach that green line is if we get there on a Monday or a Tuesday, go the other direction. I do it with options all the time. We got there on Monday. Now, if you trade something like a call credit spread, as long as it stays below your call credit spread, you make money. It doesn't matter how far it goes, it just needs to stay underneath that call credit spread. Same thing for the other side. If we'd hit the edge on a Monday or a Tuesday to the downside, put on a put credit spread underneath there. Does it work every time? No, nothing works every time. But go back and look at how often that would work. We're talking about Mondays or Tuesdays, not hitting the edge on a Wednesday or a Thursday. That is the year-to-date anchored VWAP. And we're still underneath it. No surprise. We haven't gone up enough to get past it. And we've got an angled resistance line. If you're looking for a TRB, a trend line breakover, you've got an IX10 pattern setting up here. So you have the capacity with this IX10 for an inside day breakout. And the target is going to be back to 4,100. All we need is a spark. Catalyst. So be looking for that, right? When we talk about doing these reviews, it's worth noting, do them in the afternoon as well, right? Use the afternoon session for an opportunity to do the exact same thing around lunchtime. Here's an example of that from yesterday. This is in the after hours chat. So around 11 o'clock yesterday, did an evaluation and mentioned what it is we should be looking for. Look for an end of lunch, look for a continuation to the downside, or look for a breakout of the range and a start of reciprocation back towards the regular trading sessions open. 10 minutes later, we broke out to the upside. We got our Busby. We ran all afternoon right back to the open. It's not rocket science, right? Not magic. It only has to do one of two things. It can't stay there. The range is too tight. All right, so the Nasdaq. Weekly expected move. We're a long ways from the edge. We're below the close of last week. That's really all we need to focus on. There is an additional pivot point, which is last week's low. Should we come into contact with that, there's every expectation that we're going to have a reaction in price. Mapping out a 5x5. We do not have a virgin point of control from yesterday. We already wiped it out. But we do have one over our head if we get bullish around a 1200 flat, right? It's pretty close to that, off by a few points. And we still have one to the downside from last Friday, although it could be argued that we hit it yesterday. That's pretty darn close. I would keep it anyways. That's 11,572. Looking at the volume profile on the 10-day, 30-minute, we're underneath the point of control. It's a relatively wide box. We started to come off of the low and work back towards the top, which is what we expect, right? When we're at the lows, we expect to go up. When we're at the highs, we expect to go down. When we're outside of the box, we expect to get back in it. But we rolled over. We didn't get to the point of control. We rolled over and came back down again. There is a significant level of volume at the top of the gap bottom, if that makes sense, right? We gapped down. And where that gap down opened back up in Globex, there's a lot of volume resistance in this area. Now notice the Nasdaq has not even made it through that level, although the S&P has. Right? The S&P made it through there and then it failed to keep it and dumped back down again. But in the Nasdaq, it hasn't even done that yet. We got an ADR of 4%. So if we focus on where we closed and we mark out a 4% move, it's 11,335 to the downside. And we take that same 4% move and you're looking at 12,265 to the upside. Now remember, that's not our extreme case. That's just a regular, like what we would anticipate in a normal day, argument. If you want to go extreme, the idea would be take your ADR, cut it in half, and add it to the ADR that you already have. So if our ADR is 4%, take 2 more percent and add to that. And that's what an extreme move today would look like. A 6% move. Lock limits are based on where we were at around 3 o'clock the previous day, not where we closed. So it's important to keep that in mind if you're trying to calculate where the lock limits are. Remember, they petitioned to remove lock limits in the afternoon session. So at 3:35, the lock limits are turned off. There's no safety net at that point. We are in a range-bound market for today. Our base case would be from our own Globex low to our own Globex high. To complete the rest of the range, it would be from yesterday's low to our Globex low, right? And all of that gray area is the range for today. That would be an inside day. I keep getting asked questions about these charts. I share these charts in the Discord, the Thinkorswim workbook. There's a lot of stuff in there. There's indicators, there's charts, there's setups, there's all kinds of stuff. So you have to take the time to actually go in there and look around. But what you're looking for is setting up TOS, set up videos, market breadth charts, sectors and grid charts, watch lists, trade charts. So if you're looking for one of my charts, this is where you get it. This way, you don't have to go asking for it or scrolling through looking for it in the chat because somebody else has asked for it. You can go in there and look and think of it from this way, which is how I continue to tell people. If you like the chart that you see that I happen to have shown during a live stream, imagine all the stuff that I have that you haven't seen. So come in here and take a look around. You'd be surprised at what you'll find, right? It's a big place, yes, but you can run the search in the upper right corner of the screen. And I do have 10 videos that I made on how to set up your Thinkorswim, right? And I don't do this so you can set your Thinkorswim up like mine. I do this so you'll understand how I set mine up so that if you want to make changes, you'll know how to do it. Simple, easy, step by step. I reset my Thinkorswim and I went through it step by step. That way, you'll know how to make them look like this on your own. All right, so we want to focus on the sectors this morning. Since we're bearish, we want to focus first on what's not bearish. Oil, airlines, bonds, natural gas, marijuana. What's the worst to the downside? The devil's metal, silver. Not far behind that, gold, technology, semiconductors, emerging markets, and then the financials. Now, the financials aren't down enough for us to pay attention to. I want them at least 0.5% up or down before they really start to get my attention, right? So emerging markets and the financials, yes, they're off slightly. They're down a bit this morning, but not enough yet. 0.5% isn't enough, or less than 0.5% isn't enough. So I mentioned the pot stocks. These make for a good play on the day. Earlier when I was talking about how everything is moving like the S&P is moving, this is a sector that oftentimes just does whatever the hell it wants. Same with oil or with energy. It very often deviates from the rest of the market. So if you're looking for something that's doing things that the S&P isn't doing, you can scan using beta or a lack of beta, right? If we think of beta as a correlation with SPY, we're looking for things that are not correlated with SPY. That'd be the way to go. Mentioned that crypto was up this morning, so we want to look at the names in the crypto list. Taiwan Semiconductors. Yeah, that's really about the only one. The rest of these are more Bitcoin related, right? But some of these, like Nvidia, PayPal, AMD, they're in this list, and they're obviously not coin, right? This list comes from the weights and components inside of the Smalls Futures product. If it's good enough for their basket, then it's good enough for us to use for our list. Electric vehicles. So some of the legacy names, GM is up this morning, Ford is not. That's a little unusual, right? They're normally sisters, thick as thieves. NIO is basically flat. And Tesla is driving us down this morning. Keep your eye on this, right? Tesla is more than capable of taking our market down. There's been a serious divide in the last few days between the S&P and the Nasdaq, and the biggest component of that division is the S&P having financials in it and the Nasdaq 100 not having financials in it. So you want to continue to keep your eye on that. It's going to be a large part of what we want to focus on. So we're looking at the S&P 500 pre-market change percent. We filtered it down to 100 names. The bigger the box, the bigger the market cap. And as you can see, it's red everywhere, but there are a few names that stand out, like Inuit, Morgan Stanley. So, a couple of names. Well, when we talk about finance, we really want to be able to break it down into what kind of finance. Are we talking credit cards, lending institutions, regional banks? Insurance actually fits into finance. So what kind of finance, right? And follow that down the rabbit hole. If we're looking for a midday reversal, or we're looking for a run up off of these lows, the ones that are beaten down the most are going to be the ones that I want to focus on for a move back up. I don't want to find things that are already up the most this morning, like Inuit, and then try to go long off of the high of that. Now, a lot of times we're coming here and we look at something like this, and there's just nothing there, nothing that stands out, and that's fine. Don't put something in here just to be able to say you found something, right? Like most indicators, most of the time it's just noise. So when we come in and look, if there's nothing that really jumps out at us as a idea or something to follow up through sector, industry, sub-industry, peer group, if there's nothing there, there's nothing there. But if you don't look, then obviously you're never going to find something, even if there was something there to find. So Adobe and Inuit, Baidu, NTES, Pepsi, JD, Gilead. Not a whole lot standing out. Not any particular sector, industry, or sub-industry that gets my attention through any of this. So I want to try to quantify, since we're bearish, how many names. We've been in a highly correlated market state. So if we're looking at how many names are down this morning, then how many in the Nasdaq are down at least 1%? Only 13. Well, that's not very much. So we're not crazy bearish. Ask the same question, 0.5%, 30. All right. I mean, that's the start of being considerably bearish, but not enough. So we're not heavily aggressively negative this morning, which we'd already mentioned that, right? If you look at the way the stock has been moving this morning or the way the futures are moving, it's not aggressively bearish. Swap it over to the S&P. 30 names again. And we're looking at how many names are down 0.5% in the S&P. So let's take it to 1%. 9. Now some of the names in there kind of get my attention. Goldman Sachs, MasterCard, and Tesla. Tesla's big enough to drive this market. It is my day to stream, so I'll be in around 9-ish, 9:15 in the main trade room. Don't forget, we're going to start doing 0 days on Fridays. So the live streams on Fridays are going to focus exclusively on doing 0-day trades. What they are, how to build them, trade them, manage them, things we need to be aware of and watchful of, warnings that kind of help you not take them. Because just because we can do a 0 day doesn't mean we necessarily want to. That one trade is a game changer, right? You can do that kind of trade on any day of that range bound trend momentum. Doesn't matter what kind of day you have. You can do that trade. The worst is when there's economic events through the day that cause you to not want to do them just because you're worried that the economic event would come out and run price against your position. That's it, guys. I'll see you there.